Welcome, everyone. My name is Adriana. I'm with American Humane, and I'm your host here today. I'd like to thank you for joining us on this Leave a Legacy of Love and Kindness webinar. We hope you will find a giving option that helps you plan for your loved ones and still lets you remember the needs of our animal friends. Estate planning is not just for the wealthy. Gifts of any size can make a meaningful difference in the lives of the animals we serve. The bequests we receive each year provide a solid financial foundation in harder times for philanthropy. When day-to-day donations fall due to economic or other issues, the forethought of those who leave legacy gifts keep us strong and carry us through. Our presenter today is my colleague, Kay Quillen. Kay is our Director of Planned Giving here at American Humane. She is also an attorney who has spent more than 20 years in charitable estate planning and philanthropic giving. With that, Kay, take it away.
Thank you, Adriana, and thank all of you for joining us today. Estate planning is a very important topic, but it's one we're sometimes reluctant to talk about. So I'm going to try to keep it light today. Let's cover some things that you can do to support American Humane while at the same time making decisions that take care of your family and loved ones, and of course, your pets. AARP research finds that 60% of US adults don't have wills, and many who do have documents that are wildly out of date. Since the start of the pandemic, Google reports that searches for how to make a will are up 67% higher than at any time during the search engine's history. Clearly, personal planning is something we all should do and something a lot of folks are thinking about right now. There are many ways to leave a legacy of love and kindness through charitable estate planning. Here are 5 areas we'll focus on today. Let's start off with wills and trusts. It's a wonderful way to leave a legacy of compassion and the foundation of most estate plans. So why even have a will? I get asked this a lot. Well, if you die without a will, your state of residence has intestate succession laws that say how your property will be divided among your relatives. Details vary from state to state. However, it's safe to say they may not reflect your wishes, and they do not include any provisions for loved ones that are not related to you, charities that you care about, or your pets. In fact, pets are considered personal property, just like your furniture or your lawnmower. So if you want to be in control of what happens to everything you own and care about, you do need a will. I encourage you to consult an estate planning professional to assist you with that. The term will and living trust are often used interchangeably because they both dispose of your property upon your death. So both of these arrangements are flexible, and you can change your mind at any time for any reason. A charitable gift through your will or your living trust has the advantage that they cost you nothing now. Practically speaking, a living trust is slightly more complex to set up because it requires retitling all your assets so they're owned by the trust. Then you generally serve as your own trustee during your lifetime. Living trusts have the advantage of not being subject to probate, and their contents always remain private. Living trusts often allow you to pass property to heirs and beneficiaries more quickly and with less administrative expense. On the other hand, your will becomes a matter of public record during the probate process through your local court. Depending on where you live, probate really can be a tedious and expensive administrative process. But that's not actually true everywhere, so ask your advisor. Also, if you have a living trust, you will still have a will. It's called a pour-over will. Its purpose is to take any assets that you may have missed and didn't title in the name of the living trust, or that you may have acquired afterwards. And it takes them all and it pours them over into your living trust. So whether you have a will or a living trust, there are 3 basic ways to leave a gift to charity, or to anyone really. There's a residuary, a specific, or a contingent bequest. A residuary bequest comes at the end of your will after you've said what goes to everyone. It says something like, all the rest, residue, and remainder of my estate I leave as follows. And that might be where people typically put in the following 6 charities in equal shares, and then you name the charities. That's an example. A specific bequest can be a specific sum of money, like $10,000, or it can be a percentage of your estate, like 5% of your estate. It could also be a specific item of property. I could leave my grandmother's china to my daughter. A contingent bequest is one that something else has to happen in order for it to occur. For instance, I leave $25,000 to my sister if her children are under the age of 18 at the time of my death. So whether or not she gets that money is contingent upon the age of her children at the time I die. Now, all of these can be used together in your will. In fact, they almost always are. So think about how that might help you with your planning. How could these things all work together to achieve what you want to do? Next up is beneficiary designations. If your will is current and you don't want to make any changes to it, you can still provide for American Humane with beneficiary designations associated with certain assets that you may own. They pass directly to American Humane without the probate process. They are not controlled by your will or trust unless you name your estate as the beneficiary. This has become a very popular way to make charitable bequests in the last 5 or 10 years. In the last 2 weeks, I've probably talked to a half a dozen people about this exact thing. So let's look at what assets you might have that have beneficiary designations. You should check with your financial institutions to see which accounts have this option. Banks often call it something different. They don't use the term beneficiary designation. They'll often call it a pay on death or transfer on death designation. So that would be POD or TOD for short in bank speak. Sometimes people have a small life insurance policy that's no longer needed for its original purpose. So naming a charitable beneficiary is a great way to support a cause you care about through a beneficiary designation. Donor advised funds. These are more popular than ever because they allow donors to bundle charitable gifts into 1 year when they give it to their donor advised fund for tax purposes. Then they make distributions whenever they want to. Many people don't know that you can name a beneficiary to receive the remainder of the fund upon your death. Donor advised fund administrators won't tell you that because they want to keep those assets in their portfolio forever. If you're using a donor advised fund to set up multi-generational philanthropy, that's terrific. Involving your children and your grandchildren and philanthropy is wonderful. Just know that this beneficiary designation is a great option for some people. Retirement plans. You may currently have a family member named as beneficiary. In fact, most of us do. But let's spend a minute looking at this asset. It's actually a tax-savvy source of charitable giving from your estate for reasons that you might not be aware of. For many retirement plans, your contributions were not included in your taxable income when you made them. They're called tax deferred, meaning they will be taxed on withdrawal. The combined state and federal taxes on these accounts may reduce the amount your heirs receive by more than 50%. Charities like American Humane are not subject to those taxes, so we receive the 100% of the balance remaining in these accounts. These assets can be a very tax-efficient way to include charitable giving in your estate plan while you leave less tax-burdened assets to your heirs. So that's something that you'll want to talk to your advisor about. There are a few important changes to tax laws in the last year or so that I just want to highlight for you because you might want to discuss these with your advisor. The 2019 Secure Act and the 2020 CARE Act made changes that affect various kinds of retirement plans. The required minimum distribution age, that's RMD, was raised to 72. And for 2020, there's a waiver of the required minimum distribution. There were also changes about how many years heirs have to complete withdrawals from any account they inherit. You may have heard this referred to as a stretch IRA because they could stretch it out over their lifetime. Bottom line is those are gone. Basically, everybody but spouses must take it all within 5 years. So that may have a profound effect on your beneficiary's tax situation, and you should keep that in mind when planning this. Those of us in philanthropy were really pleased that there was one additional provision. there's now a $300 above the line charitable deduction available to everyone. So the first $300 of your charitable giving, regardless of whether you itemize or not, will be deductible. Speaking of charitable giving, if you have an individual retirement account and you make gifts to charity, I just want everybody to be aware of this method. It's a terrific way to give. In fact, I call it the last great tax break. It's called the qualified charitable distribution. It's been around for a number of years, but I really find that a lot of people don't know about it. So I want to let you know. This will give you virtually the same outcome as a charitable deduction. So it works like this. If you're 70 and a half or older, up to $100,000 per tax year per account holder, directly from an IRA to a charity, counts towards your RMD, but it's not counted as taxable income. You can do this in any amount. The upper limit is $100,000, but towards the end of the year, I see gifts like this all the time, $50, $100. Many people who know about this make all of their charitable gifts directly from their IRA. But that's the key. It has to come directly from your IRA to the charity. So don't wait until the very end of the year, because these do take a little time to do. I have a sample letter, if you're interested in this, that you can modify as needed for your situation to give distribution instructions to your IRA administrator. Just email me after the webinar and happy to send you a copy. If additional retirement income is something that would benefit you, this section has a couple of ideas for you. These next gifts pay income for life to you and then leave a charitable gift. First, let's talk about charitable gift annuities. A charitable gift annuity is a contractual arrangement between you and American Humane. We follow the suggested rates of the American Council on Gift Annuities, as do nearly all charities who offer gift annuities. And it works like this. If you're age 65 or over and make a gift of $10,000 or more, we will make fixed payments to you for life based on your age at the time of the gift. You'll get a partial charitable deduction for that gift. Part of the payout to you will be tax-free for a period of years. If you fund it with appreciated assets like stock, there's special capital gains tax treatment. Part of the tax on the capital gains will be completely eliminated, and the remainder of it will be spread ratably over your lifetime. So that's really a great deal tax-wise. And then upon the conclusion of the contract, the remainder comes to American Humane to further our work. I'd be happy to give you a customized illustration of this. Sometimes it makes a little more sense if you can see the amount you might be thinking of and your age and what percentage you would get and so forth. Super easy, takes me 5 minutes. Just call me or email me anytime and I'm really happy to do that for you. Then there are charitable remainder trusts. This is a type of trust that you would establish with your bank or other financial institution, choosing the payout rate and other terms to meet your desired income and tax benefits. Then you transfer the property to a trust to fund it. You receive a generous charitable deduction, and if you fund it with appreciated assets, you pay no capital gains tax. At the end of the trust, whatever's left comes to American Humane. I'm not going to go into a lot of detail on charitable remainder trust today. I could probably do a whole webinar on those, and maybe that's what I'll do next time. But there are two basic kinds of charitable remainder trusts that pay you income. One is called a charitable remainder annuity trust, and that pays a fixed dollar amount. And the other one pays a fixed percentage of the trust's annual value. That type is called a charitable remainder unit trust. This latter one is the most flexible, and there are many, many different variations that can be created to meet various planning needs. Like you could make additional gifts to that over a number of years. You could delay payments until you reach a certain age. So if you're really looking for flexibility, a charitable remainder trust is worth exploring, especially a charitable remainder unit trust. All right, there's one last section on giving, and then we'll wrap up with some information on providing for our pets. So if you're a fan of the game show Jeopardy, then think of this next section as the potpourri category. Alex, I'll take, did you know you can give for 100? Did you know you can give appreciated assets? Well, real estate and publicly traded securities are the most common of these. It's really easy to transfer shares of appreciated securities electronically. I can email the instructions to you or your broker if you just want to contact me. The benefits of gifts of stock, they have to be long-term appreciated, so held longer than 12 months. You get a fair market value deduction, and you pay no capital gains tax. For instance, if you have stock that's worth $10,000 that you only paid $5,000 for, you won't pay capital gains tax on any of that, and you'll be able to leave a gift of $10,000 to American Humane that really only cost you $5,000. So it's a great way to give. Also, real estate, your home or vacation property, office buildings, rental units, any of those might make a good charitable gift. You could do an outright gift of property, perhaps a vacation home that you or your family don't use anymore, or a partial interest in a property that you're selling. Say 25% interest in a rental property, which has all sorts of tax issues related to the sale of it. A 25% interest gift of that to a charity can offset a lot of those tax complications. Did you know that you can give your primary residence to American Humane now and keep the right to live there for the rest of your lifetime? That's called a life estate. That also works for a family farm or a vacation home. Now, we've talked about specific bequests in your will. So you know you could do that with real estate, right? And we talked about funding a charitable remainder trust. You could easily do that with appreciated real estate, and that would be a great idea. And we talked about transfer on death accounts at your bank. But did you know about transfer on death deeds? It's like a beneficiary designation for real estate. More than half of all states and the District of Columbia now permit this. So you might want to ask your advisor. It's really simple to do. If you were contemplating leaving your home or your vacation property to a charity in your will, a transfer on death deed might be an easier and more efficient way to do it, and it keeps it out of your taxable estate. Real estate does tend to be people's largest asset. Okay, yes, I said taxable estate, and I can hear some of you rolling your eyes when I say that. It's true that currently the federal estate tax only applies to estates worth more than $11.58 million. And right now, you may not have a taxable estate. However, tax laws do change all the time. In fact, we just talked about that a few slides ago, right? Some tax law changes in 2019 and even this year. In 2017, there was a massive radical change to the tax code, which left 2/3 of us who used to itemize no longer being able to do so. And in fact, right now, the current federal estate tax is set to revert to the 2017 level of $5 million indexed for inflation in 2025. So in just a few short years, it won't be $12 million anyway. But with our current federal deficit, many experts believe the federal state tax may be on the table even before then. And then don't forget that many states have their own inheritance and estate taxes, and those generally kick in way before $12 million. So estate taxes, or the concept of your taxable estate, is really something to be mindful of in your planning, no matter what the size of your current estate. Did you know we have a great vehicle donation program? If you listen to the radio a lot like I do, I'm sure you're familiar with these. In fact, I have a certain really annoying jingle stuck in my head about them. It's really very easy to do. Just call the number on this slide or go online to our website, and you can fill out a form and someone will contact you. We'll tow it away at no cost to you, and we really accept more than just old cars. I've seen gifts of boats, RVs, lots of other things. So if you or someone you know has something taking up space in your driveway, why not turn it into cash for our mission? Last in the potpourri category, did you know you can give artwork, jewelry, or collectibles? Perhaps you're downsizing, or maybe you've just got some art or antiques or some things in storage that you'd like to get rid of. We can work with you to evaluate the gift potential of those items and ensure that you maximize your charitable deduction. One note about gifts of artwork, though, they're not as straightforward as you might think. So please call someone who's knowledgeable about the ins and outs before you do that. Also, take a look at IRS publication 561. I put that on the slide right here so you can do it later. It's easily available on the IRS's website, and it has all the details about gifts of non-cash property. The last thing we want to cover is providing for our pets if we're no longer able to do so. This is something pet owners often ask us about. In fact, it's the most frequently downloaded brochure on our website. Professional advisors may not include this in your planning, and as an attorney, I know this, it really does happen all the time. They may not include it in your planning unless they're prompted to do so. They may not be pet lovers, or they just may not know that you are. So let's talk about establishing a pet trust versus including a provision in your will for their care. That's what I call a pet guardian. Perhaps you have many animals, like a farm or a complex situation. Maybe you have pets with special needs, or an especially long-lived pet, like a parrot or a turtle. You may then want or need a formal pet trust. You may wish to leave a substantial sum of money and put some formal accountability in place regarding the provision of care to your animals. So a pet trust involves setting up a separate legal entity, funding it, and appointing a trustee to oversee how the funds are used, and to disperse the funds to the pet's designated caregiver in accordance with whatever your wishes are, whatever instructions you put in your pet trust. You can include as much detail as you would like about the care to be given to your animals, and you can even require regular reporting to the trustee about it. You can establish this fund now or through your will. Pet trusts often leave the remainder of the trust to an animal-related charity like American Humane after the death of the last pet. If that's the type of arrangement that makes you feel comfortable, then a pet trust is absolutely for you. Some people do opt for something less formal by establishing a pet guardian in their will or living trust. Just like naming a guardian for your children, please talk to your chosen pet guardian before you name them in your documents. I've included some sample language on the slide right here so you can see what a pet guardianship sort of sounds like. Your advisor will word it differently, and you can include as much detail as is appropriate. I encourage you to name at least 2 people. You always want to make sure you have a backup in case the first person is unable or unwilling to serve for some reason. And I also encourage you to talk about the financial aspect of this with your pet guardian. Consider leaving a sum of money for pet care. When you think about how much you spend each year on your pet's food, medical expenses, routine veterinary care, let alone if something happens to your pet, and then you multiply that times the pet's lifetime, it could be quite a sum of money. So discuss your expectations regarding the care and comfort of your pets, any special needs they have or that they might develop in their old age. The bottom line really is no one wants a surprise phone call from the executor of your estate informing them that they're now responsible for your herd of llamas. It's really not how that's supposed to work out. So we're going to end with questions, but before we get to that, thanks again for joining us today. I really hope this was informative and helpful for you. As promised, this slide has my contact information and our website where you'll find lots of great charitable planning information. There's free brochures you can download if you haven't done so already. Now let's look at questions. Here's one that was emailed to me before the webinar. It says, how can I sign all these documents and forms while we're social distancing and many businesses are closed? I can't find a notary. That's a really timely issue, isn't it? We've been doing remote or virtual signings with real estate settlements for years now. So the technology is not at all new. It's just that with the pandemic, we're finding new uses for it. So you can now do an online search and you can even find notaries that are offering this virtual service. The one caveat with that is to check with your state or locality to see if a remote notarization or remote witnessing is a legally valid option for the documents that you are executing. You can also check with your local bank or notary public and see if you can make an appointment to appear in person, but still maintain social distancing while you're presenting your ID and signing and taking turns signing the document. That's actually something that my husband and I did just recently, and we were able to wear our masks and go to the notary, and it worked out just fine. It was very easy. So that's the only question I have. I'm going to turn it over to Adriana here. Let her unmute herself and see if she has any questions that anybody submitted while I was doing the webinar. Do you have any questions?
I do. I have one from Deborah, and she's asked, do you need to make your pet trust irrevocable if you are older? Can it be brought back into your assets? If not irrevocable and you need it for your care, how much would you leave in a pet trust?
Okay, that's several questions. If you make it irrevocable, I think what Deborah's asking is, if you become incapacitated, could you have a pet trust that kicks in then? And then if you get better or the money's needed for your care, that's really pretty specific to your situation. I'd have to say probably. That's a very lawyerly answer, right? Probably, or it depends is the general lawyer's answer to everything. And so I'm going to go with both of those on this one. I think you could probably do that if I understand what you're asking, but you'd have to talk to your advisor about how best to word that, or whether or not it might take two different trusts to do that. And the last part of the question was, how much money should you leave in it? I touched on that a little bit. It really just depends, because it depends on what kind of pets you have and how many. But I think just taking a look at how much you spend on your pet every year on routine veterinary care, and then assuming that during the lifetime of every pet, everyone that I've ever owned anyway, something seemed to happen that necessitated an extraordinary expense of some kind. So if you think of that in terms of how many years the pet's likely to live, cats can live 15 or 20 years. Dogs, it really varies, but how long do they live and how much are you spending on them per year, and multiply that, and then just make sure that there's enough there for the person who's going to be taking care of your animals.
And then we have one more from Richard, and his question is, how do I go about finding a lawyer?
Oh, that's a good one. I get asked that one a lot. And first I would say, especially since we know now that lots of people are also doing planning, I wouldn't hesitate to ask your friends or family. It might be something that they've done recently. They might have updated their will. They might be thinking about it just like you are. So if you don't have an attorney you've used before, ask your friends or family who they've used, or if they have friends that have used someone local that they would recommend. You can also ask someone at your bank, or your financial advisor or accountant or your tax preparer. All those are people who are allied professionals. They all sort of work in the same general service category, and they're all going to know one another. So they're going to know an attorney who's in your area. And last but not least, this is a great source that's available many, many places. But your local bar association, your county bar association, that attorneys, all your local attorneys will belong to it. They often offer a lawyer referral service. It's low cost. It usually works like you pay a small flat fee and you get a referral to an attorney, and you can go have a consultation with them for 30 minutes for a very, very low fee. So you can call up the lawyer referral service and say, I'd like to talk to someone about estate planning, and they will refer you to someone who does that type of work.
Those were the only questions in the queue.
Okay, well, if that's all the questions, then we're done for today, and we're going to sign off. But again, here's my contact information on this last slide. Please don't hesitate to contact me if you have any questions at all. Thank you.